All right. What's up, everyone? Hooday. Welcome in. It's been a little while since I've done a live stream, so I wanted to jump on here and talk about this real estate market here in Cincinnati. Before we get into that, I hope you're doing well. I hope you're doing great. It's October 19th. It's my dad's birthday, 70 years old. Happy birthday, Dad. It was my mom's birthday yesterday. They were born 8 hours apart, same year, different dates, high school sweethearts, married 50 years this August, last August 12th. So happy birthday, Dad. Love you. Thank you for being awesome. Hope you guys are doing great. As always, if you jump onto the stream and have any questions, pop them in the chat. Would love to answer any Q&A. We'll be glad to answer any questions you have about the real estate market or living here in Cincinnati, or just say hello. Love to see you in the chat. Into some context the last few years and also the past few months, so that if you are looking to buy in the Cincinnati or Northern Kentucky market, or if you're looking to sell in the Northern Kentucky or Cincinnati market, you can kind of have some idea of what's going on and what's the best decision for you. Interest rates have clearly had an impact on slowing down the market. That's kind of their intent, is to inflation was getting out of control, so the Fed raises rates. There's not a direct correlation from that. It's not, the Feds aren't raising the mortgage interest rates, but there is a correlation there. Mortgage rates have obviously kind of spiked up the last few months, and that has definitely cooled everything down. But to what extent, and what does that look like going forward through the rest of this year and next year? And how should you make a decision if you're looking to buy or sell based on that? We're going to talk about that. Few other personal things I just wanted to share. I haven't done a Bengals update really all year. I wasn't sure if you guys, some of you guys are football fans. Most of you probably are not. Maybe it's somewhere half and half. I don't know. But I do want to say, if you are a Bengals fan, hooday, back to 3-3. This last week's game was a heart racer. I have to say, I'm usually optimistic when it comes to watching the Bengals. When I have my friends over, I'm like, it's all right. It's going to be good. I was so negative this last game. I just thought without DJ Reader, the way they were running it down our throats, the way our offense started in that game, and how much time of possession we were having going into that second half, I was like, I am not feeling good about this. Andy Dalton's going to beat us again. But it looks like the offense has figured something out with the shotgun snap, or at least they can be flexible. It's kind of like Lou Anarumo's defense is now making its way to the offense in terms of flexibility. So if teams are going to play that cover two, we're starting to hit that Tyler Boyd, those checkdowns, take those 5-6 yard checkdowns, hit Boyd over the middle, get Chase in some space, and you see what Chase can do when he catches it and the yak that can happen. Okay. If you guys are Bengals fans, let me know. Put it in the chat. Love to hear it. I don't know. So yeah, overall, I think from a Bengals standpoint, we are basically exactly where we were last year. We're like a good team, not one of the best teams, and we might hit something magical come playoff time. That's kind of where I'm hoping. In other personal news, I'm going to I got to show you guys this real quick. We just got back from a trip from Florida. Here's some of my lovely kids. Let me know in the chat if you guys have ever driven from Cincinnati down to Florida and what that's like for you. I mean, it's never super fun to do when, for us we drove down to Orlando to my wife's sister-in-law's house. This was, let's see, I don't know, a couple of Thursdays ago. We left after our kids' school. We left around 5 p.m. We drove through the night. My wife and I are like, we're going to tag team this. We're going to do it. You take a nap, then I'll take over. I got this cup of Mountain Dew around midnight, like in a giant styrofoam cup. I haven't had a Mountain Dew in a long time. My body was doing weird things, but it got me till about 3:30 a.m. So cheers to Mountain Dew. And but we had a great time down in Orlando. Then we went over to Siesta Key Beach. I mean, look at this. This is just precious. That's my daughter Miriam. That's my 2-year-old Holt. Yeah, you got the sunset on Siesta Key. 4 out of 5 of our kids could swim this year, or mostly swim. So it's a lot less stressful when that is happening. There's my 12-year-old Emil doing his skimboarding gig. That's pretty good stuff right there. That's my 2-year-old Hope. Okay, enough of that. Let's get to the data. I promise you. So, interest rates are up. There's no question the market has been cooling off. If you're working with me on the buyer side, it's not like the market has completely swung in your favor at this time. It's still a seller's market. There's still low inventory. If a home is priced right and in good condition, it's still going to go fast. Probably still in multiple offers, but maybe it's more like 2 to 3 to 4 offers versus back in April, May, June, July, you might have seen 5, 10, 15, 20 offers, and you had to go over list price by 10, 20, 30, 40 grand. You had to waive inspections, do an appraisal gap, all those things to win. Now you're not having to do that as much. But I also wanted to do this video to give you guys some perspective of like kind of how you're thinking about it, because I talked with some of you on the phone when you call in and you're like, well, I'm just going to wait till the market cools. I'm going to wait till prices go down. And I think how you have to think about that, and obviously I'm a realtor, I get paid by selling houses, so take this with a grain of salt, but interest rates are going up, and so there's a couple of factors here. Interest rates are going up, so the longer you wait, because they have indicated they're going to keep going up, the longer you wait, your payment's going to keep going up, and it's going to knock you down a bracket on what you can afford. That's point number one. Point number two is housing prices are still going up overall, or at least for the year on end. Maybe they've gone down a little bit month to month here, but that's more seasonality than I actually think it is the market. We always see housing prices dip a little bit in September, October. If the larger homes, the more expensive homes haven't sold in the summer, they pull it back off the market because they can afford to. And so the overall median goes down because a lot of those more expensive houses pull off the market if they didn't get the price they wanted because they can afford to wait, whereas other people may not be able to afford like that. So we always see a seasonality dip here in September, August. So prices are still going up slightly, and inventory is still low. It has crept up a little bit. Days on market has crept up a little bit, but not a ton. And so we're certainly not in, I think everyone is, I always say this, but I think people they have in their mind what happened in 2007, 2008, 9, 10, where the market went down after the Great Recession. And I get that. There's good reason to be thinking about that housing prices would go down. But that was one of the worst housing market crashes in American history, if not the worst, maybe other than the Great Depression. And it took about 5 years for housing prices to come back. Let me show you that really quick, actually. Excuse me. If you guys can see this. So this is going back to 1965. Wish you could see my cursor. Oh, okay, you can see this line right here. So here's, you see housing prices go up, through 06 and 07, and then they went down here in 08, 09, and then they kind of hit back that 07 number in the beginning or at the end of 2012. That's basically when they got back to those 07 peaks, I would say. And then since then, we've seen nothing but steady growth through 2019 into early 2020. And then the pandemic just, boom, blasted home prices up. So we've seen them go up. This is national, by the way. This is the median prices of houses sold for all the United States nationally. So I guess one of the points I'm trying to make with this is you could see a dip down. But overall, if you again look at this chart, housing prices continually go up. No matter inflation, and even after a Great Recession, they go up. So you had massive inflation, right? In the late 70s back here and early 80s, you had massive inflation, and yet housing prices went up all throughout that. And so what the Fed is trying to do, they're trying to curb inflation right now, and they're kind of starting to get a handle on it. It hasn't gone down yet. It's remained pretty static, but with rates going up. So you can probably imagine rates are going to continue to go up. And that inflation might get under control, but housing prices are probably still going to go up too, unless The reason why, going back to this chart, just kind of give a little history lesson. The reason why housing prices dipped is because you had a huge buildup of housing inventory leading up to '07. Builders were building a ton of houses, and anyone could get a loan. And so you had all this housing inventory. Then when the recession hit, you had a lot of unemployment. A lot of people lost their jobs, and a lot of people got foreclosed on. So you have this combination, really, of a huge housing surplus coupled with a lot of people having foreclosures. So you have even more housing inventory, and then you had the low buyer pool. And where we're at right now is still kind of the opposite of that in a way, because builders over the last 10, 12 years, they didn't build enough supply to keep up with the demand of what we've had the last few years. That's really been what's the overall big picture of what's happened is builders didn't keep up. Then you had a bunch of millennials who stopped renting and started wanting to buy houses, and you just had more demand than you did supply. So supply has been very, very low for the past few years, which is why housing prices have gone up. Could that change? Well, maybe, except the difference between '07 is builders haven't built a surplus of houses. Really, the past few years, everything they've built has basically been bought. So that they're still kind of behind. There's still an inventory shortage kind of nationwide. And are there going to be a lot of foreclosures? Maybe. We'll probably see more in the next few years if the economy continues to kind of to go south here. But the difference between '07 and now is people still have a lot of equity in their houses. Because there's been so much appreciation the past few years, people could, if they get behind on their payments, if they lose jobs, they potentially could tap into that equity as opposed to just getting foreclosed on. So it's probably, I'm going to wait till the housing prices go down, or I'm going to wait till interest rates go down. The point I'm trying to make is they might not be going down. So if you're looking to buy and you're like waiting for things to go on sale, historically speaking, that's just probably not the best strategy. If you want to buy, you should probably buy. If interest rates go back down, you can refinance later if interest rates go back down. But interest rates, I wonder if I can get this up real quick. Give me 1 second. Let me see if I can do this. Fed interest rates chart. So let's take a look at this. Yeah, so interest rates going back, we got really spoiled here in 2020 because those rates were down. They were zero basically. This is the federal funds effective rate. This is not what I'm looking for. Hang on. Fed mortgage rates. Let's do that one. 30-year fixed rate mortgage. Okay, so here we go. 30-year fixed rate mortgage. So look at this chart, guys. Here's where I mentioned the inflation back in the late 70s and early 80s, and that's when interest rates, they were around 8%, right? 8, 9% in the mid 70s, and then they went boom, 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 way up 12%, 14%, 15%, 16, 17, 18% mortgage interest rates. So you think you have it bad now, just go back to the early 80s and try to get a loan at 18%. That would have been a lot of fun. And then they kind of just steadily came down over the years into the 90s, all the way down. They just kept going down. Down, 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 down. And so everyone was spoiled these last few years of like, oh yeah, interest rates should be around 2-3%, right? That's what people were thinking. Can you guys see this? Sorry, let me slide this over. Let me try to. Hang on, y'all. Sorry, you probably can't see the end of this thing. There we go. Okay. So down here in 2020, they dropped from 4 to 3 down into the 2s. I refinanced my home around 2%. Is amazing. 15-year 2%. And now they've hiked back up here in 2022 up to 4, 5, even up 6, 7%. And so, how can you think about this? I mean, historically, they're still very mid, right? Historically, they've been around 6, 7%. And so if you think about it historically, you're not getting a bad deal. You're just getting the interest rates are up compared to where they were 2 years ago, which were like the lowest they've ever been in 50 years. And so what should you do? What should you do? Should you wait? Well, chances are interest rates are going to keep going up. They've indicated that. And chances are home prices are going to keep going up. Now, how fast, that's what I want to look at next, is what is actually happening in the market. So let me pull up Cincinnati report so you can guys get a feel for this city and Northern Kentucky. Actually, I just kind of pulled, so this is data from the Cincinnati MLS for Butler, Warren, Claremont, and Hamilton County sales. And I first wanted to give us a little context going back 3 years, and then we'll look at the last 6 months. So first thing I want to show you guys here, and actually let me, my cursor, let me try to do this here. One second. Okay. All right. I think you can see my cursor now. Let me see here. You can't. Never mind. Nope. Okay. That's all right. Sorry for the technical difficulties. Okay, let's look at this report though. This is the 3 years, the median price of sold homes going back to Q3 of 2019 through Q3 of 2022. And it's looking at sold prices quarterly. So if you look at this first left column in Q3 of 2019, the median price sold in these 4 counties that I pulled in Cincinnati was $197,000. If you go all the way to the end of Q3 2022, which we are just finishing up on here, we just finished actually, the median sales price is $265,000. So it went up $68,000 or a total of 35% over the course of those 3 years. So over 10% appreciation of the median price sold in the last 3 years. Now, what you see here in Q2 of 2022, so this last column, that's where it hit its peak. It hit a peak of 275,000 median, and it's dropped back down in Q3. So that all for me, all that passes the eyeball test. Yeah, Q2 was nuts. Q2 was June, July, August, yeah, and even Q1 2022 was just it was a challenge, right? If you were trying to buy a house, it was competitive. We had the lowest inventory we've ever had in 50 years. Prices were going up all the time. If you wanted to win, it was like, if you're like, hey, I want this house, Eric, I'm like, okay, gird your loins. Let me tell you what you have to do to win this house. Let me call the agent. Let me try to get an idea of where they're at with all their offers. See how much over asking they are. See what terms they need. You had to do a lot to get a house. But if you got one, great, because the price of that house has probably gone up since. And so it hit its peak in 275. We're down a little bit in Q3 of 2022. But if you look, and if you go back to Q3 of 2021, it's still up, right? 2021 Q3, you were right at 250, and right now you're at 265. So that's my point, is housing prices are still going up. You guys can't see that because you can just see my face right now. So here you go. Go back and look at Q3 of 2021. It was at 250, and now it's at 2021. Let me go to the next chart here. This is supply and demand over that same time period. The red columns are going to be, let me scroll down so you guys can see this. The red columns are the amount of properties for sale, and the green columns are the amount of properties sold, okay? 1.5% of the amount of properties that are for sale, okay? So this is a chart that's just showing inventory, supply and demand. And sales are also down slightly from that amount, but a lot of that's just because inventory is down. So the percent of homes for sale is probably greater, but the total amount sold is slightly down because inventory is down from 2019. And you can see if you were to draw a line from the top of that 2019 column to the 2022, you can see how it's steadily gone down. And yes, so that again, that's just another piece of information here, which is we are still not yet back at the place here in 2022 where the amount of homes for sale is greater than it was previously. So if you look at Q3 2021, you're a little over 10,000 units for sale, whereas right now in Q3 of 2022, you're under 9,000 units. So the inventory is just still low, right? The inventory is still low. Here's the next chart I want to show you guys, which is the average days on market for under contract properties. So back in, and then I'll kind of translate this for you. Back in 2019, the average days on market for under contract properties was 26.1 days. And that number right now is 15.2 days. Okay? So now, again, I'm giving you some historical context so you can understand 3 years ago. If you go back to just 2021, Q3, it looks like that number was right around 12 and a half. It looks right in between 10 and 15. The average days on market was about 12 and a half days. Right now, a year later, it's at 15.2. So year over year, days on market is slightly up. Slightly up. So that's what we're saying. The market is cooling a little bit. It's shifted a little bit in that the days on market is not as high as it was in 2019, which was 26 days. No, but from 2021, where it was 12 and a half days in Q3, right now it's at 15 days. It's slightly up. What does that mean? It means houses aren't going for sale. They're not selling quite as fast as they were last year. Right? They might sit a little bit longer. The buyers, because of the interest rates being up, the buyer appetite has cooled slightly. So, good news for you as a buyer, you might not be in as many multiple offer situations. You might find something that's been sitting on the market for a little bit. You might actually be able to buy something at list price, which is crazy, or even more crazy if it's been sitting a couple of weeks or a month. You might actually even buy something below list price, and it might not be a terrible house. So it's not a buyer's market yet. It's not completely flipped where you have all this inventory and you can take your pick and get deals. No, we're not there, but it has cooled a little bit from 2021. Okay, now if you're a seller, you have to think about that a little bit differently too. If you're a seller, you're thinking about selling, you've probably seen a lot of appreciation in your house the last few years. Earlier in this year, you could throw your house on the market and get tons of offers and have it sold in the weekend for sure. That's shifting now. Now you've got to stage it a little bit. You've got to do some of that work that you weren't doing or you didn't have to do previously, maybe last year and into this year, where it doesn't matter the condition of your house or how clean it was or if you staged it or if it smelled good or any of those things that you think about normally when selling your house. But now you've got to think through the competition a little bit more. You've got to look at the comps a little bit more. You've got to, what I told my sellers and my listings early in the year was, look, the best strategy is you want to be at or a little bit below list price because you don't want it to sit on the market. What you want to do is attract a lot of buyers and get them to bid up, and so you can take your best pick and you can leverage that even a little bit more. You do not want to be above the market. You don't want to be trailing and say, well, Bob's house down the road sold for $375 and I know my house is better than his, and so I'm going to sell it for $385. If he sold in July for $375, that was a peak. Okay, so that same, if Bob's house sold again right now, it might sell for $370 or $365. It might have come down just a little bit because it hit a peak in Q2. We saw that in the chart, right? So don't get greedy, and if you're looking to sell right now, don't look. Now you have to kind of discount the comps from Q2 just a little bit and be slightly under it. because because of the interest rates, the buyer appetite has cooled a little bit. And so if you're wanting to sell right now, you need to, list with your agent and be thinking through and make sure you have the right pricing strategy. Otherwise, you're going to sit longer. You're going to be sitting 30 days, 45 days, and then then you're going to have to drop the price to get people back in to see the house, and then they're going to lowball you. So you just dropped it 10 to 20 grand, and then they're going to offer 10 to 20 grand below list price. So don't make that mistake. It could cost you thousands. Okay, that is what we look like from an average days on market 3 years ago. So the last, oops, that's the same chart. Okay, so now I want to look at the last 6 months data. So this is the number of units for sale weekly, so that we're looking at kind of supply and demand a little bit again here. Going back from May so from May through July 25th, it looks like, and July 25th through the present. So this is breaking it up in the previous 12-week periods and the current and the past 12-week periods, if that makes sense. So 24 weeks total, 6 months. This red line down the middle is breaking it up into 12-week periods. And what we see is back in May, July, we had inventory of 2,383 homes for sale, units for sale, and that has gone slightly up in this last 12-week period up to 2,594. It's gone up 9%. So again, same story, different chart. If you guys hate charts, I'm sorry. But I'm just trying to tell this story different ways, which is inventory is slightly up. Days on market is slightly up. Home prices are about the same or slightly down. Okay? That's where it's at. It's not crashed or anything like that, but that's where it's at. So, okay, I think that's all of my charts. So for all of you who hate math and hate numbers, that's part of your job of having a realtor who can kind of hopefully translate some of these things for you. All right, I'm going to jump in the chat, see if there's anyone here, anyone who asked anything. Alejandro, what is up? Joanna and I are watching you. What's up? Good to see you, Alex. They just moved here from California, and we got them a house, so that's awesome. Good to see you guys. Hope you're enjoying the house. Terrific clients. You guys were so much fun to work with. Cool. Thanks for saying hi. And don't see any questions in the chat, so we're running at about 30 minutes here. I've got a closing up in Westchester this afternoon for another client. And then I'm going to head down to my church group for the night. So I think that's it. I think we're going to wrap it up. Wanted to get these. You got to come see the house. We've done some upgrades. Hey, I'll bring the beer. Give me send the invite, and I'll be there. Yeah, would love to come see it. Can I bring all of my kids? That's the only question that matters. And give my wife a break. That's a great idea, by the way. Housewarming parties. Alejandro, would love to throw that for you. That's something we haven't done in the past. Something we want to get better at with Team Sztanyo is just client events, housewarming parties, hanging out with you guys more. If you guys don't know it, you probably don't know it from watching this channel, but I'm actually an introvert, and so I can speak to the camera. That's easy for me. But like hosting the big events, I'm not usually like the big extroverted realtor guy who's throwing all those parties. But with the help of Carrie and some other team members, hopefully we can do that. Like we're trying to get better at that. We're going to start sending out some emails around this video content. We actually have a client event scheduled in November at Swing Fit Golf Club in Blue Ash. It's going to be sponsored by Gerard Home Inspections and Supreme Lending, which is awesome. Happy to have those sponsors on board, and that's huge. It should be a good time. We're hoping in the future, would love your guys' ideas, but we want to have other events that are kid friendly as well, where parents are bringing with the kids. I could certainly see. We're trying to think something in the winter. The winter's hard. We're looking at some ideas like ice skating or even heading up to like Rheingeist because they have like a cool area up there. We're kicking some ideas around right now, but maybe next spring, summer we could get a Reds game in. That would be a blast. I'd love to have a big Team Sztanyo Reds game event. That would be super fun. So Alejandro is going to be there at the client event. Right on. Awesome. We'll see you there. If you don't know, you can bring a friend too. So if you guys have made any neighbors or friends, that's open. We got a few spots left on that. So just shoot us an email if you have anyone you want to invite to that. That would be great. So yeah, wrapping this up. I hope this was giving you guys a little knowledge on where the market is. I know this was kind of short notice today. I'll try to schedule these out in the future so you can, have some time either in the evening or your lunch break or something like that. I need to figure a good time where you guys can hop on here and ask your questions, because I love answering those questions, helping you guys have good insight on the market so you're making good decisions for you and your family. As you know, our tagline here is find your home, strengthen your family. We believe here at Team Sztanyo that home is where families grow strong together. We get to play a small part in helping you find that place where your family can grow strong. I believe kind of with all of my heart that a city full of strong families is a strong, strong city. So I love getting to do what I do. Love helping you guys find your homes, and we'll be doing more of that. So if you know anyone who's looking to buy or sell, send them our way. Give us a shout. We'd love to help them with that process. All right, guys, thank you so much. Hope this was helpful today. Happy to do more of these in the future as the market continues to shift, so you guys can make the best decisions for you and your family. Have a great day. Who day. Let's beat those Falcons this weekend, right? Yeah. All right. See you.